And welcome back to my YouTube channel. In today's video, I'm going to be sharing with you a very powerful strategy that if you can apply this strategy exactly how I'm going to be sharing it with you in this video, you're going to make real profit in 2025. Now, the reason why I'm using a small trading account like $200 is because most of my subscribers, most of my viewers are from third world countries like Africa and other countries, okay, but I also have other viewers from other countries, but most of my subscribers, you guys don't really have big trading capital. So in this particular video, I'm going to be showing you how you can grow a small trading account, okay, and also um I'm also going to share with you a trick on how you can stay profitable trading the financial market in 2025. So make sure you watch this video to the very end. Now, if you look at these accounts, you see that I've been trading these accounts for quite some time. If you look at the dates right here, all of the dates there, this is just some days ago, okay, and this was just um so like if you look at this account, I've made a profit of $867, okay, and I've withdrawn 648, okay, and I have a balance of 206, okay. So this is just this is just this is just last week trading, okay. This is just last week trading history, okay. So I'm not just giving you a strategy that I'm showing you something that i I actually use, okay. So guys, if you've not also gotten my forex trading blueprint, okay, there's a forex trading blueprint that most of you don't know about it, but there's a forex trading blueprint that if you can get that forex trading blueprint, it will really help you become consistently profitable. In this particular strategy, we are not going to be using any indicator, okay. We're just going to be approaching the market with pure price action. Now guys, if you're trading, you have to understand that you have to get to a stage whereby you have to start using pure price actions, okay, to look at the market. You don't need to have a lot of indicators in your chart, okay. But for beginners, for people who really don't, who are still new to the markets, who their eyes have not yet been sharpened or stuff like that, they still need indicators, okay. But if you can get that, if in my first trading blueprints, we don't really use indicator, okay. It's structured way, just basically everything though. So now in this strategy, I'm going to show you how you can trade gold and also how you can trade Euro USD. Okay, guys. So like I always talk about, if you're trading this market, you have to understand that this market is like a pendulum. It's like a pendulum. What do I mean that? What do I mean by it's a pendulum? The market can be going in a direction today, and the next day is returning back. If you saw my previous video, be running, okay. So but can you see, guys, if you look at this trade, this is a very sweet trade. If you saw my previous video, I took this particular trade from here. I took some trades from here and we closed the trade somewhere in this direction, okay. And if you look at this market right here, if you look at the market has currently pulled back. Can you see the market pulled back to this level? Let me just attach this indicator. Let me just show you. Some of you don't really like watching some of these kind of videos. You feel like we are just showing you charts, but the truth is that the only way you can make money is from this chart. So you have to understand, you have to take your time and play around this chart. So if you look at this market, initially 2 days ago we were in this trade from this direction right here. I'm going to be attaching a screenshot so you see what I'm talking about. We were in this trade from here and we bought this market till it got to this point, and I explained to you that the market moves like a pendulum, okay. The market does not just go on a straight line. In as much as this is the 1 hour time frame, okay, and if you look at the price action that happened here, the market seemed like it was a fast movement, because if you look at this other part of the chart, that's this side, you find out that the market also came back. But can you see the large pullback? There was a very strong pullback. It pulled back to like 50% of this range. Let me use Fibonacci so you see what I'm talking about. No, let me just, it pulled from this point to this point. So the markets pull back to this zone. So it pulled back to like the 50% of this particular zone. Okay, I wanted to like call the name, but you're gonna find it in my forex trading blueprint, because I don't want to start saying some of those terms because you don't know the foundation. Okay, if I start using those terms here, you will feel like I'm just saying something that you cannot relate with. So the market pulled back to 50% of this zone in this particular trade. Okay, so but this is what I'm trying to buttress is that the market made a pullback to this zone. Initially the market bought from here, but it also sold back again. So what I want you to understand when you are trading is that everything starts from the higher time frame. A lot of you just want to start trading the 1 minute time frame or the 5 minute time frame. You are totally clueless of what is actually happening in the market. You don't know what is happening in the market. You don't know what is going on. It's only three things that can happen in the market. The market can be bullish, or the market can be bearish, or the market can be in a range or in a consolidation. Okay, so these are the three things that can happen in the market. The market can be bullish, or the market can be bearish. Okay, or the market is stuck in a range. Another thing I want you to understand is that in the forex market, the market is going to range 70% of the time. Guys, don't forget these things. This seems like very common and very cheap knowledge, but if you can put this thing at the back of your mind, it will always help you to know what is happening. It will always help you to predict what is most likely going to happen. So the market is going to range 70% of the time, and the market is going to trend 30% of the time. What does this tell you? This tells you that a lot of time in the market there's going to be noise. There's going to be noise a lot of times in the market. So you don't have to trade every single time. Okay? You don't have to trade every single time. You now have to streamline your trading to align within this 30% window. Now, this 30% window, where does it take place? This 30% of the time whereby the market is in a trend, the market is either buying or selling fast. Okay, because that's basically what it means. So what particular time does this particular movement happen in the market? It happens only, not only, but it happens mainly during the London session and during the New York session. Okay, the market trend during the London session and during the New York session. You have to understand this. Okay, so this now tells you that you only have to trade the market during the London and during the New York session. Some professional traders that I know, they only trade one session. Okay, so if you're asking me, trader Joseph, how do I stay consistently profitable? How do I avoid taking losing trade? Because if you look at your charts, guys, you guys are actually making money. Sometimes when you trade, you actually make money, but you end up losing the money. Why? Because you're over trading. Because sometimes you are taking some trades that you feel like, oh, let me just take this trade. It may likely play out, and if the trade mistakenly play out in your favor, you try it again. But you are trading outside your strategy. You are trading outside the time when it's going to be more favorable to you. I'm not trying to say that there are people that don't trade all the time. Yeah, there are people that trade all the time. They trade in any market condition. But if you want to stay consistent, you're going to have to choose to trade only when there is high probability in the market. And what are the times whereby there are high probability in the market? It's only when the market is actually moving. Just imagine you sold from here. Imagine you sold from here and the market sold, bam. Within a short time, you are done with this market. The move from here to here is more than 50 pips. It's more than 50 pips. So, but all the other times, the market was just doing other things. So you have to, but this particular trade happened during the New York session. Okay, so guys, I cannot actually tell you when is the London session or when it's going to be the New York session in your country, because I know that a lot of you be watching from different time zones. So in your country, you have to check when is New York time, when is London sorry, when it's New York session and when it's London session. Okay, so you now do a little back testing during these sessions and understand which of these particular session is more favorable. But now another thing I want you to understand is that the London session is a slower session. Is slow and is consistent. Okay, but the New York session is fast and is fast and also not consistent. Okay, look at this particular move right here. This move happened during the New York session. This is the 5-minute time frame, guys. Remember, pay attention to this little details. This is the 5-minute time frame. It happened. This particular trade happened during the New York session. The markets fell, bam, bam, bam. In 3 candles, the market delivered more than 60 pips. So that's just how the New York session behaves. The New York session is fast. It's fast and it pulls back quickly. So if you look at this chart here, the markets move from here, got to this point, and it has pulled back to 70% of the move. Okay, if we're even calculating from this zone, it has pulled back to more than 50% of the move. So you have to understand that that's just basically how it is. But I want you to test it. Test it, know which one you like, which one suits your personality. Some of you are very, very impulsive. Some of you are very, very calm. If you know you're a very, very calm person, you check the one that suits you. If you know you're very, very impulsive, you check the one that suits you. Everybody have different character flaws, okay, and different kind of personalities. Okay, so you just have to. That's why you have to still do what suits you. Okay, you understand? So guys, that's just another thing. Then after you figured out the time frame you want to be trading, you now go to the higher time frame. What is happening in the market? Is the market moving in my direction? Is the market trying to buy, or the market is trying to sell? Okay, is the market trying to buy, or the market is trying to sell? If the market is trying to buy, then from the higher time frame, you've now done your analysis. Then you now come to the lower time frame and look for your trading opportunity. Okay, you look for an entry. For you to develop a strategy that's going to help you make consistent profit in the market, you need 3 things. Okay, you need 3 things. Number 1, you need to identify the time frame, the time where you want to be trading. Okay, do you want to be trading in the London session? Do you want to be trading in the New York session? Okay, if you've identified the time frame whereby you want to be trading, or you want to be trading the 2 of them, okay, then you know that this particular trading window is when you're going to be trading. You don't trade outside your trading window, because those particular times will give you low probability. So once you've identified this, then you now always do your analysis from the higher time frame. Okay, do your analysis from the higher time frame. Okay, start from the weekly time frame. What is the market doing in the weekly time frame? Is the weekly time frame trying to print a bullish candle, or is trying to print a bearish candle? Okay, this is just basic price action. Okay, this is just basic market structure. Okay, so check other videos in my channel. You find videos on how to identify market structures. So once you've done this, once you've looked at the weekly time frame, you also look at the daily time frame. Look at the 4 hour, look at the 1 hour, and look at the 30 minutes, 50 minutes. Just look at how the market is printing those candles. You squeeze your chart, sometimes squeeze your chart, expand your chart, look at it. If you can even use a laptop, a big screen, to do your analysis, then it's fine. Okay, so once you've done all your analysis from the higher and the lower time frame, you now wait for price to come to your POI, which is what? Point of interest. Your point of interest is basically where you want to trade from. Okay, is where you want to trade from. All right, maybe like the zone, or the zone whereby you are expecting price to come and react to, or give you a confirmation to know that, okay, it's time for you to enter. Okay, it just depends on your strategy. Okay, but I advise you to get that forex trading blueprint, guys. It's going to help you make consistent profit. I'm telling you from experience. So once you've identified your POI, okay, your point of interest, you now enter your trade. If you enter your trade, you set your stop loss. If, for instance, this is the trade that you want to take, let's say you wanted to take this trade from here, maybe like the 50% of this zone, and your stop loss would have been the low here. Okay, and your take profit would have been like, let's say 3 RR. So guys, can you see this is the minimum lot size? This is the minimum lot size. This is the minimum lot size, which is 0.01. This is the minimum lot size. So if you had planned to take a trade like this, okay, and the market tap this zone, let me use this. Let me use rectangle. So if this would have been your stop loss zone, okay, if this would have been your stop loss zone, then here is now your take profit zone. The reason why I'm not cutting this part, the reason why I'm showing you how I'm doing this, because some of you may not really know how to do this on your chart, so you can just learn it from this video. Okay, so this would have been your take profit area. Okay, so, and this is just an example. So once you have your particular stop loss zone and your take profit area, you wait for that trade. Like this particular, if like this particular trade and the market has gone to 50% of that zone. So guys, another thing I want you to also understand is that in every trade, once in a while you're gonna make losses. So one thing I want you to understand is that you're going to make losses once in a while. It's common, it's normal as a trader. It's normal. If you look at my trading history, you're going to find out that there's a particular point. Okay, look at this. I made losses, right? I made losses. So there's nobody that has all the knowledge. Okay? So once in a while you're going to make losses. It's normal, it's constant. But if you look at my chart, you're going to find that there are several profits. So the goal of this particular strategy, or the goal of your strategy, or the goal of every forex trader, is to be able to make more than you lose. If you can make more profit than losses, then you're going to stay profitable. This particular trade, are just recent trades. Towards today's date, can you see this is January? This is 4:57 p.m. Tuesday, January 7th. Okay, and if you look at this particular trade right here, it was just yesterday. These are just yesterday's trade. Okay, so I'm showing you something I'm using. So guys, if you can also get that forex trading blueprint, it will really help you shorten your journey in the forex markets. Guys, thank you for watching this video. Make sure you like this video, make sure you subscribe to my YouTube channel, and also share this video with your friends and your loved ones.